Welcome to The Explainer. Today we are digging into the dramatic events of March 2nd, 2026, a day that saw the Indian stock market just plunge deep into the red.
So this was the number that was just flashing across screens everywhere. I mean, a drop of over 1,000 points on the Sensex, that's a clear signal of, widespread panic. So the big question is, what on earth happened?
All right, so here's what we're going to cover. We'll look at the global tensions that started it all, quantify the losses, touch on the economic shockwaves, see who won and who lost, and then zoom in on 5 key stocks. Finally, we'll talk about what comes next. Let's jump right in. All right, so let's get into it. The whole thing really kicked off because of these escalating tensions over in the Middle East. We're talking about the US, Israel, and Iran. So, you gotta understand, this wasn't some local problem. Nope. This was a global shockwave, and it triggered this massive sell-off that caught India right in the crossfire.
Okay, so how did all that global anxiety actually hit home? Let's look at the hard numbers and see just how bad the damage was on the Indian markets that day.
Wow. Yeah, the Sensex just got hammered. It plummeted over 1,000 points, closing at 80,238.85. Now, sure, it did pull back a bit from the day's lows, but look, a loss of this size, that's a massive jolt to investor confidence, no question about it.
And it wasn't just the Sensex. The Nifty 50 was right there with it, dropping more than 300 points. What that tells you is that this sell-off wasn't just in one or two sectors. It was broad, hitting the biggest companies across the board.
And if you want to see what fear looks like in a number, this is it. The India VIX. You can think of it as the market's fear index. It just exploded, surging by a staggering 25%. A spike like that is basically a giant blinking red light, signaling extreme anxiety about what's around the corner.
So, you might be wondering, right? Why did a conflict happening thousands of miles away hit the Indian market so hard? Well, it really boils down to 3 core economic risks that hit India directly. Let's break them down.
Okay, so you've got this triple threat scenario. First up, the energy crisis. Crude oil prices jumped like crazy, and since India imports something like 85% of its oil, that hurts a lot. Second, you have trade disruptions. The main shipping route for India's oil is suddenly under threat. And third, the rupee gets weaker, which just makes buying all that expensive oil even more expensive. It's really the perfect economic storm.
But even in total chaos like this, it's not all doom and gloom for everyone. The market pretty much split in two. You had the clear casualties, and then you had the safe havens, where all the nervous money started to run.
So on one side, you've got sectors like auto and aviation just getting hammered. Why? Well, the fear of higher fuel costs is a killer for them. Then you have banking and IT, which got hit hard because foreign investors started pulling their cash out fast. But on the flip side, all that money had to go somewhere, right? It flowed into defensive sectors like defense, pharma, oil exploration, and of course the classic safe haven, gold.
And this chart just lays it out so perfectly. Take a look. You see the overall market, the Nifty 50, in the red, but then look at the defense stock BEL and gold. Both of them surged by over 4%. That's a classic flight to safety right there. You can literally see it happening.
All right, so with all that as a backdrop, let's get granular. We're going to zoom in on 5 specific stocks that are now on pretty much every trader's radar for the upcoming session.
First on the list is Barrett Electronics, or BEL. This is a classic defense play. It's a direct beneficiary of this feeling of, defense preparedness. Think about it. While the whole market was in a free fall, BEL showed some incredible strength. So now all eyes are on it to see if it can actually break out and hit new highs.
Next up, we've got ONGC. This one's pretty straightforward. They explore for oil, so when crude prices go up, their potential profits go up too. The stock actually hit a new 52-week high, and it's trading above all the key technical levels. That's about as clear a bullish signal as you can get.
Okay, now for Sun Pharma. This is your classic safe haven stock. In fact, it was one of only 3 stocks on the entire Nifty 50 that managed to end the day in the green. It's pretty simple. When things get chaotic, investors tend to park their money in stable sectors like pharmaceuticals to kind of ride out the storm.
Then there's Mutooth Finance, which got this awesome 1-2 punch. First, the price of gold, which is their main business, right? It just skyrocketed. And as if that wasn't enough, they also got a major upgrade from Morgan Stanley. That combo helped it pop an impressive 3.5% on a day when almost everything else was bleeding red.
And finally, let's talk about Paris Defense. Now this one's a bit more of a speculative play.
It didn't just jump because of the whole defense theme, it also got a boost from some exciting news that it's getting into the semiconductor space. So you've got two stories driving it, which means this one is definitely a high volatility name you'll want to watch very, very closely.
Okay, so what does all this mean for the next few days? Let's bring it all together and look at what the experts are saying and, more importantly, the key numbers you need to be watching.
Well, the consensus among analysts is pretty clear. Buckle up, because we should probably expect more turbulence. The market is now pricing in what they call a war premium. It's basically an extra layer of risk on top of everything. And if this conflict drags on, we could easily see more foreign investors heading for the exits. Also, remember, the market is closed tomorrow for Holy, which gives everyone a much-needed day to kind of process all of this.
So here's the bottom line. When the market reopens on Wednesday, these are the numbers to watch. For the Nifty, that key support level is 24,700. We need to see if it holds. And for the Bank Nifty, it's all about that big, round, psychological number, 60,000. You can think of these levels as the battlegrounds that are going to tell us a lot about where the market heads from here.
So we'll leave you with this to think about. In a market that's being driven by this much geopolitical fear, is the biggest risk just not participating at all? Because while all this volatility and fear creates a ton of risk for sure, it also has a funny way of uncovering some pretty unique opportunities for anyone who's prepared and paying close attention.